Well, hi, everyone. Welcome to the Buffett and Beyond Research Saturday Market Recap Letter, and this is June 1st, 2024. And remember, if you want to live on the beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does now. And the market this week, oh my gosh, Friday was a train wreck until it wasn't. The Dow went through a wild move to close up 574 points after being down a good part of the day. And in a shortened week, we saw the Dow have its worst day in a year, and then yesterday, its best day of this year. And yeah, it was all those buy programs that came in from the institutions because it was the end of the month, and we talk about a pit bull low during the week of the end of the month, and then a bullish market from then into the first couple of days of the new month. So what we're looking at is a cyclical move that we saw on Friday. The only problem is we're always pretty right about the pit bull low, and then being higher going into the end of the month and then the first day or two of the following month. The problem is we don't know when that pit bull low is, well, because it's very, very scary, and therefore you don't know what was going on, especially with all the indicators pointing down. So were we going to buy at the low on Friday? And well, we did, as we'll show you a little bit, but we just added stocks to one of the ETF portfolios. But first, our weekly stock analysis. Well, we're back to Arista Networks, new numbers on it, and it's up 75% year over the past year. This stock remains in our growth portfolio. We show you why. Now, our ETF video, back to getting some stocks in there. Our favorite ETFs are showing weakness, and we showed that all week long in the charts. However, the building ETF gave us a buy signal on Thursday, and we're thinking, well, this stock or this ETF is showing us a bullish short-term move, and the rest of the markets, the rest of the ETFs are showing us weakness in their indicators. But because we got that buy signal on the home building stocks, we wanted to put 3 of those stocks into our All-Stars ETF portfolio, which we've been waiting to do because we wanted better prices with all the indicators pointing down. So when we saw the buy signal on the home builders, we said we better get these stocks in the portfolio before this market falls. How far, we didn't know, because Friday mornings didn't start off very well at all. So anyway, we did it, and we're happy we did. And the market turned out fine on Friday, and we'll see what happens on Monday and Tuesday of this coming week. Signal's still pointing down, but is this a turn? And that's what we'll have to wait to see. And folks, you want to read that daily letter because that's where it tells all. All right, let's get on to the S&P 500 and see what happened. And here we were. We got our topping signals, and then it came down, and it came and fell below the 20-day moving average on Thursday. And then Friday went way down to the 5,200 level, below the 5,200 level right in here, and then closed up 574 points for the day. Unbelievable move. Now, we still have a downward signal here because we've been overbought, and the Dow has been the weakest indicator or index, while the S&P has been in the middle, and the QQQs have been the strongest. So right here on the S&P, we still have this downward move in here, which gives us pause to not go crazy and buy everything in sight like the institutions did on Friday, and you wonder why they totally underperformed the S&P 500 year after year. And the statistics are, and I've gone over this many times, but over any 10-year period, 96% of the professional money managers who manage the publicly traded mutual funds cannot outperform the S&P 500. 96%. But over any particular year, and how do I know this number? Because I count them every year. And we see which mutual funds or how many mutual funds underperform the S&P 500. And it's about 75 a year underperformed the S&P 500. And that's been pretty consistent over the past 20 years or so. But when you measure over any 10-year rolling period, 96% of professional money managers cannot outperform. And Friday, if that was a false move, just a false rally within a downward move, checking out this indicator here, then they've been wrong again. And those were the institutions that were doing all that crazy buying right at the end of the day on Friday. So let's look at the SPX, which is the S&P 500, and we'll see where it bounced off. Yeah, 50-day moving average here. This blue line, 50-day moving average. So the market went down, almost touched that. Actually, there was a 39-week moving average in there, which it hit. And a lot of technicians watch a 39-day moving average. And the market bounced right off that and closed above the 20-day moving average, as we showed on our last chart. And this is where the S&P is right now, and we see the huge volume. So that's institutional buying, folks, when you see this kind of volume like this. The green line represents the volume when the market closes up for the day. Red lines represent the volume when the market closes down for the day. But down here, what do we have? We still have that sell signal. And what we're looking at is a higher high on the S&P 500. Not that yesterday was the higher high, but overall, when we look at these tops, we see a higher high here, and then over here, we see a lower high on this index. So that's not a good sign. So we're looking at, we have to favor the downside right now, even though we made changes in the ETF portfolio, or some additions to the ETF portfolio. And what we did was we took positions from other stocks in that ETF portfolio to get the money to buy the new stocks. So in other words, we didn't add money to the portfolio. We just changed things around is really what happened. We took from the 18 or so stocks and we added 3 more. But same amount of money in that ETF, except it closed up for the day, so we made a little money in there. But it was a good move getting into those stocks. I've wanted to get into them for a long time now, but the home building was a pretty strong index, and it was going down. And then all of a sudden it gave us the buy signal on Thursday, so that's when we made our change. Now let's go to the Dow, and we can see the Dow. We really thought the Dow was going to come down to this level here, and gee, it just didn't want to do it. That doesn't mean it has finished its downward move yet, because it's still under its 50-day moving average, which is this blue line, and the green line is the 20-day moving average. So the Dow is the weakest of all the indices that we follow. High volume again on the upside, and we'll see if this indicator down here starts to turn around. Because if it starts to turn around at a higher level than it was back down in here, that's a bullish signal. So we just have to wait and see what happens, and don't get silly out there and do anything dumb. But Susan wrote in and she asked about Novo Nordisk. And is that a good time to buy because it fell in sympathy with Salesforce on Thursday? So was it a good time to get in? And we said, yeah, it's a good time to start nibbling on this stock because of the charts that we looked at. It's still looking weak, but still it fell drastically at one point. We don't have a chart of it here, but it still fell drastically at one point. We're talking about Novo Nordisk right now, and we said it's a good time to start nibbling, and that was on Friday morning's daily letter. So we made a good move there, at least in the short term, and that's another stock that I wanted to get into all year because we have Eli Lilly in our dividend growth and income portfolio, and that stock has just been flying high. And over 5 years, Eli Lilly is up 500%. Novo Nordisk is up 400% over 5 years, with the Dow not hitting 100% over 5 years. So those two stocks together are up 400% and 500% over the past 5 years, way outpacing the S&P 500. And you can see why I wanted to get into Novo and have been looking at it all year. And finally, as Susan pointed out and alerted us to the fact, hey, this stock fell a lot. Should we get into it? And we started nibbling on Friday morning. So that was a pretty good move. Thanks, Susan. And then when we look at the QQQs, well, the QQQs came down, fell, and this is on Friday, fell down below the 20-day moving average, which is the green line, and closed above it. So for the day, even though it was down drastically during the day, I mean, this is quite a move right in here. Even though it fell drastically, all of a sudden it turned around, still closed negative for the day, as we see up here. Negative for the day, but just by a tad. Now, is this going to form a bullish reversal? We just have to wait and see. The problem is down here, it looks like this black line wants to cross over the red line to the downside, and we'll just have to wait and see what happens here, folks. We are overbought in the QQQs, and that's because we own, or not a lot of people own, the good stocks in the QQQs, the ones that have been leading it all year long. And we're talking about the Googles, the Microsoft, the Nvidias, of course, and Meta, and we're looking at those stocks, and they have been leading the way, and we've been in those stocks. That's why those ETF portfolios have been performing so very, very well. I'm talking about our top stocks in the ETF portfolios. So that's working out very, very well. And just as an aside, while we're talking about the QQQs, the hedges that we put on, and I wrote this in the ETF letter yesterday, so make sure you take a look at that. And we see that the hedges that we put on actually made us money, of course, because the QQQs were going down, but we made money over last year in our 30% hedged when we used the timing of those hedges. So we have hedges that are on all the time, and in other portfolios we have hedges that we time of getting in and getting out when we get various signals. Right now we're in those hedges because of this signal down here. Just to let you know, folks, because some of you are using those hedges on the growth portfolio, which is not a bad idea at all. So you want to follow that timing, and that's in the daily letter. So if you're following the timing at all, then you can use the SQQQs that we have been using, and you read all about it in the daily letter, and that has been working out very, very well this year. Yeah, the hedges are working well, whether you keep it on all the time or whether you use timing for it. And yes, you can use that for the growth portfolio, because I've been asked that question many times during the year. And portfolio protection, if you're just buying the disaster puts, 12 to 15% under the market, you're just sitting fine here. You're going for walks, you're going to the beach. And we have 3 puts for about $135,000, $140,000 portfolio. And you can see that we have raised that as the market went up. So we have the SPYs, which are representing about $400,000 or $40,000 worth of portfolio protection, and we have them as high as 440 on the SPY puts. So therefore, if you don't want any other kind of protection and you want this protection just in case something crazy happens in the market, you have it. So folks, it's been a short week, and it's been a tumultuous week. Yeah, let's use that word. It's been a rocking and rolling week, and it ended on a good note. And this is about the 5th or 6th Friday in a row that the market has closed up, and that brings out complacency in the market. But it's always a good sign to see a Friday up day, because when you come in and you buy, or the market is up on a Friday, that means there's a lot of people out there, especially the traders, that are comfortable with the market. And a trader, don't forget, a trader that goes in and buys on a Friday has to be pretty sure that nothing's going to happen over the weekend that will make Monday look like a very, very sad day. And Monday is usually a down day anyway, but we're at the end of the month, beginning of a new month. So Monday will be the first trading day of June, and we'll see what happens. Maybe those traders are correct, at least for a little while. Don't forget, they're in and they're out several times during the day, and they are not investors like we are. So, folks, go out, enjoy the weekend, be with your family, be with your loved ones, stay safe, and we'll see you right back here on Monday.